All right, let's leave Davos and go to Asia. What are the top market moving news from that region this week, and what insight can we get into the final week of January?
I think the insight that we can get into the final week of January is that it's going to be a test of how durable this very remarkable start to 2018 is going to be. All across the world, you saw very good sentiment economically and also in the markets with record highs on Wall Street and also here in Europe, Germany among them, but also other markets. And the question is, will that remain? Is that the way 2018 is going to go? A first test could be next week, where there will be further corporate reports rolling in. On Asia, there were also some record highs, like in Hong Kong, for example, Hang Seng, as high as it's never been. The yen offering some food for thought for Japanese investors. The Nikkei there, the highest it's been this week since 1991. So for over a quarter century, not a record high, but over a quarter century high there. And I think probably for me the main news pertaining to Asia this week is not coming from Asia, but it's about Asia mainly. And there we are back with the U.S. President Donald Trump. He's willing to reconsider TPP, the Trans-Pacific Partnership. And that would, of course, be a game changer on the United States' relations with Asia, Asia's relations with that huge market and with that huge country, and also China's role. China was ready to step in and dominate more the Asian theater than it already has with the United States out of the trade deal, but out of the trade game. But if indeed the U.S. steps in and reconsiders it, Trump's condition is a substantially better deal, then that could be a major move in that part of the world.
Right, thank you very much, Ulrich. It's been a beautiful week with you. Let's hope for a better week ahead. Enjoy the rest of the weekend.
Yes, thank you.
In Asia, markets closed mixed on Friday as the dollar wobbled after gaining overnight following comments from President Donald Trump. Tokyo's benchmark Nikkei 225 index gave back morning gains to close lower by 0.16%. Data released on Friday showed December consumer prices in Japan were stable. Over in Seoul, the Kospi reversed slight losses to end higher by 0.49%. Hong Kong's Hang Seng Index jumped 1.51% after snapping a 7-day winning streak on Thursday. The Shanghai Composite edged up 0.3% to close at 3,559 points, and the Shenzhen Composite finished the session 0.16% lower. And here in Africa, the chief executive of South Africa's stock exchange operator says an accounting scandal involving retailer Steinhoff has highlighted the need for more activist shareholding and more vigorous oversight by boards. Steinhoff, which owns more than 40 brands, including Poundland in Britain and Mattress Firm in the United States, admitted accounting irregularities last month. That prompted an 85% share price slide that wiped more than $10 billion off the value of a company listed in both Johannesburg and Frankfurt. Steinhoff's top 2 executives have resigned, as well as its chairman, and the group is currently being run by an acting chief executive. The company is battling a liquidity shortfall following the accounting problems. And here in Nigeria, the country will consider raising $2.5 billion through Eurobonds in the first quarter to refinance a portion of its domestic treasury bill portfolio at lower cost. This is according to the head of the Debt Management Office, Patience Oneha. Ms. Oneha says the country will also try to get back into the JP Morgan Government Bond Index with improving liquidity in the local currency market. According to her, a Eurobond replacement will depend on market conditions, pricing and tenure. Nigeria has said it plans to refinance $3 billion worth of a local treasury bill portfolio of 2.7 trillion naira. In November, Nigeria sold $3 billion in Eurobonds, part of which it used to fund its 2017 budget, and then paid off 198 billion naira in treasury bills. And Barclays Africa is examining takeover bids from 5 prospective buyers for Nigeria's debt-laden Nine Mobile. Although a deal may take a few months, as it will involve restructuring the company's debts after a default last year. Barclays Africa, appointed by Nigerian banks to try to find new investors for Nine Mobile, will make a recommendation to the telecom company later. Previously known as Etisalat Nigeria, Nine Mobile took out a $1.2 billion syndicated loan from a group of 13 local banks in 2013, but struggled to make repayments last year, forcing its lenders to step in. The central bank then intervened to stop creditors from putting it into receivership, leading to a change in its board and management as well as its new company name. And IMF Chief Christine Lagarde has welcomed a commitment by Zimbabwe's new president, Emmerson Mnangagwa, to stabilize the country's economy and work to improve relations with the international community. Lagarde met with Mnangagwa on the sidelines of the World Economic Forum in Davos, Switzerland. It was their first meeting since Mnangagwa took power in November, when the military ousted Robert Mugabe, who ruled for 37 years. Afterwards, the International Monetary Fund said Lagarde welcomed President Mnangagwa's commitment to stabilizing the Zimbabwean economy and working towards normalizing the country's engagement with the international community. International donors withdrew support for Mugabe's government after he imposed policies that included violent seizure of white-owned commercial farms. The country has not been able to borrow from international lenders since 1999, when it started defaulting on its debt. And the Democratic Republic of Congo's Senate has approved legislation that raises taxes and royalties on metals, including copper and cobalt, under reforms fiercely opposed by the mining industry. The upper house of Congo's parliament adopted the law in a form that is not identical to that passed by the National Assembly on December 8. The main difference between the bills approved by the two houses is in the wording of certain articles, but on the substance, there is a strong convergence. The new law increases royalties on copper and cobalt to 3.5% from 2% and gold to 3.5% from 2.5%, introduces a profit windfall tax, doubles the state's free share in mining projects to 10%, and reduces the period during which contract stability is guaranteed to 5 years from 10 years. And Côte d'Ivoire's mining sector turnover rose by 11.5% in 2017, an increase achieved mainly via exports of gold, manganese and nickel. Manganese output increased by a whopping 146%, reaching 510,000 tons in 2017. Gold output rose to 25.395 tons in 2017, 2.15% higher than in 2016. Nickel production, which started in 2017, was at 379,766 tons. In 2017, Ivory Coast exported 5 shipments of diamonds worth 11,156 carats in total, earning $2.1 million. We'll take a quick break, and when we return from Davos to Dondara in Kenya, a tale of two mountains. Do stay with us.